What's up, guys? Welcome back to DCA. Tonight, what we're going to do is take a look at a metric which is, in my opinion, one of the most important metrics in all of cryptocurrency. I'm going to show you how you can use this metric to identify places where we may come under heavy resistance while the price is moving up, as well as prices where we may hit large levels of support, bounce, and turn around in times when we're heading down. So what I'm going to show you is the distribution of all prices at which Bitcoin last moved. So in other words, this will show us, what levels are people holding the asset at. So we know that the price recently went to $60,000. And so we're going to look at just how many people actually still own coins, how many people capitulated there. So we're going to use this to both improve our knowledge of why things happen in the market the way they do, and we're going to use it as well in order to help give us a better picture of when the price may hit resistance as well as find support. So if you're new to the channel, what we do here is data analysis of the cryptocurrency asset class in order to identify these types of trends. We try to look at data in new and interesting ways and visualize it in ways that other people simply aren't looking at the metrics. And so that's what we're going to do tonight. If you guys like this type of content, hit like and subscribe. You could head over to the Discord channel where we actually have a machine learning algorithm model which has been developed in order to help you identify where market cycle peaks and bottoms occur. So it helps you get into the market at lower prices, and it helps you get out of the market when the rest of the retail market is FOMOing in. It's a free trading view indicator, and you can sign up for it on the Discord channel. Okay, guys, so what we have here is simply the price of Bitcoin since January of 2021 until the current time. What you're seeing in the color-coded dimension, so you'll notice that the price is color-coded. This is simply the DCA index risk model, whatever risk level it was at the time. So, when it was at 64K, or better yet, when it was at around 57 or 58K in February, the DCA index risk model got into the highest tiers, indicating that it was likely that the market was reaching a top. Okay, so when it was in these levels, it was reaching the red color here, and that indicated that it was likely time to sell the asset. Comparatively, when we were down here in July and here in January and February, it was indicating that we were very near a bottom. Okay, so it doesn't mean that you're at the bottom. You could certainly continue lower, but it indicates that you're likely at a price where it will be difficult for the price to go much lower. It simply indicates that. Now, anything can happen, but historically speaking, it's been very accurate in this regard. So what we're looking at today, though, the levels at which individuals are holding the asset. Why are we doing this? Well, whenever you're looking at an asset, knowing where a large number of individuals have the asset is very important for you, because it can help you to identify when you may be reaching a level of resistance, rather, as well as if you're coming from the up to downside, it can show you where you may hit a strong level of support. Okay, and this is what we've seen sort of play out over time for Bitcoin. And what we have here is essentially each level. It shows you at a price. So these are 25,000, so it's 2.5 times 10 to the 4. So 25,000, 30K, 40K, 50K, 60K, 70K. We have the same thing over here for the price of Bitcoin. So this is the price of Bitcoin, and these are the number of coins last time that they moved on the network, and the number of coins at each price. So it tells us where individuals own the asset, where they actually own the asset. And what you see is that, first of all, there's two things become evident. Let's start by looking at around this level right here. So we're going to look from this approximately 36,000 up to around the $40,000 level. In this level, there is just a massive amount of coins that have recently been purchased. Okay, so as we've come through this level each time, you'll notice that we get into this level and then we reach this peak up at around 40k, and then we bounce down and then spend some time at these lower levels for a bit, like we did here. So we got up to around 40k, and let's just do that. We got up to 40k, and then we bounced down. All right, so we broke through on the second try. Back in May and June, we bounced between this level right here for quite a long time. So basically this level here, we went all the way down to around 3.5 or down to 35k, bounced up to 40k, couldn't get above, came back down. And we've just seen Bitcoin do that over and over again now. And if you go even further than that, if you go down to this 32k level, we see that there is just an extraordinary number of coins held at this level. In fact, currently, we actually are in a place where approximately 15% or more of the entire supply of Bitcoin is held in this level. So what does that tell us? That sort of indicates to us that this is going to be a strong level of support for Bitcoin going forward. Because when you have a large number of holders, and now remember, the people that acquire down here are typically, when people are buying the asset into market weakness, these are typically long-term holders, and they simply do not sell the asset. So we're seeing the characteristic behavior of long-term holders acquiring the asset, doing it in this 40k, maybe up to 41k, all the way down to this around 30k level. And now this has just become a level that is showing extraordinary strength. Now, even 2 or 3 weeks ago, when we were coming down to this level, we didn't have necessarily this type of strength throughout this range. So this has been built up. A large number of coins, a very large number of coins have been acquired, when we were right in here. So people have been buying the asset in large amounts as we've been moving into this level. And it only makes sense. If we come over quickly to look at the DCA index risk model, again, I don't mean to, keep talking about it, but it just goes to show, how big of a sell-off this level was. So if we look at the DCA index, we got down to a level down here, actually down to 13. I'm sorry, I said 18 before. We got down to 13. We have only been lower than that during the COVID capitulation event back in 2018, when we just had a massive capitulation going from 6.5K all the way down to 3.2K. And then one other time right here, when we had this massive drop off going from around $300 or $320 all the way down to around $150 in a very short order. So there have only been several times when we've actually been down this low. And what has been the key characteristic each time that we've been at that level? It has been an excellent acquisition opportunity for savvy investors looking to buy an asset which is likely going to appreciate as time goes on. It's going to appreciate, the price is going to go up, and it may go lower from here. It could certainly go lower, but this has been an excellent buying opportunity in this lower $30,000 level. And that's what we're seeing play out in the on-chain metrics. We're seeing that individuals have been acquiring tons of the asset down in the low $30,000 level and in the upper $30,000 level. So what's another thing that sort of sticks out to us? Well, we also have a large number of holders in this 46K up to around the 64K level. So what this is telling us is that one of two things sort of could potentially play out here. In this range, we actually have approximately 20 to 25% of the total supply. So you have just a massive quantity of the supply in this area. This area, you'll note, is going to very likely act as a level of resistance. In fact, once you start getting up to this right around in this area here, you've seen that it's acted as resistance in the past. It's also acted as a level of support back in the earlier stages of the run, but that was fueled by a massive quantity of retail investors. And very likely, many of those retail investors that were sort of, being told to buy the dip on YouTube, buy the dip, buy the dip, buy the dip into a massive rally that we had just seen. It was terrible advice, and you know, and now you have a lot of people look at how many coins are held in this level, up at this 55, 56, high 50s, even into the 60s. You just have a large number of holders in that level. This makes me think of two things. Number one, I tend to think that your smart money, your long-term investors were not buying in this range. They were not buying in the 55 up to 65K range. I just don't simply believe that they were. I think that you have a lot of retail investors who were in their first market cycle who bought up here, and now they're just, a lot of them, in my opinion, will be waiting until we get to these prices again to try and get out of the market. Okay. Now, another thing can also be at play, and I think it will be clearly it will be a combination of these two things occurring. I think you're going to see new entrants into the market who got burned this cycle. Now they've learned their lesson, and they're going to turn into long-term holders. So I think as you're coming back through this level, I think you're certainly going to hit some resistance, particularly when you get into this, this 54 up to around 58K level. I think you're going to have a ton of resistance in this area. But, you know, with that said, I think once we're able to get above this level, it's going to turn into a strong level of support. And so it's just going to come down to, how long essentially does it take to do that? How long does it take us to get back to these higher levels? One additional thing that we could look at is sort of the intermediate point. So we know that we're sitting right at this 40, approximately 43K level right now. Well, if you recall that when we hit 45K earlier, we had an instant sell-off, and that's simply because there's a lot of individuals holding the asset right in this level just above where we are now. So we are coming up to a very high level of resistance. We're at a place where we're going to meet resistance as we try to get through this level, because you can see that we've had trouble in this area before. Okay, when we tried to make a rally back here at around 46K, we got rejected at the 50K level. Back here in July and August, when we tried to get above this 50K level, we got rejected. In fact, we got above just for a few days and then got rejected all the way, going from around 53K, where we hit this resistance here, all the way down to this level where we've said, the 40 to 41K level, where we just have a ton of support. So this level, this 40K level, has become a huge level of support all the way down to around the 30 to 31K level. So that's something that we need to continue to watch. We want to see the asset be able to get above this level, and then then we have that next game to play where you're going to start meeting these psychological levels. Like we'll have the 20-week moving average, the 50-week moving average, things like this. So this to me is a high quality metric which can show you exactly where individuals are holding the asset, in what quantity, and it's going to point out for you where you're going to come up upon points of support and resistance. So the long story short is we have a huge level of support right in this area. Now, I will say this, if we go below the 30K level, it's an absolute void all the way down to 20K. We simply didn't spend much time between 20K all the way until around here, right at 30K. So if you do drop below 30K, two things can happen. A big time buyer can step in and try and front run any sort of turnaround. That's certainly a possibility. Or we could just plummet with this top heavy market that we have right now, these numerous individuals up here in the, basically the 46K all the way up to 63, 64K. You could see capitulation and just plummeting down to 20K. But at the end of the day, I think if something like that happened, it would be such an amazing buying opportunity that I think a lot of your people that have been buying in these levels, people like Michael Saylor, I don't think he would let an opportunity like that go to waste. I hate to speculate on things like that, but we've seen it multiple times now where, people like him have stepped in and bought as much of the asset as they could when it starts going into those lower prices. So knowing something like this, it simply arms yourself with another piece of information, another tool at your disposal to become a more savvy investor, to become a more informed investor. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. You could head over to the Discord channel to sign up for the DCA Index Risk Model. We also post a lot of various TradingView indicators on the channel that you can download. They're all free. Everything's free. You could go to other channels and buy it for a lot more money, or you could come here and get it for free. So that's it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.